Greetings, accounting students. Let's just start with a simple definition of markup. It's the difference between the cost price of an item and the sales price of an item. And the reason why we have a difference between those two is to generate a profit, a gross profit. Let's start with a simple example. So let's say we have a markup of 50% on our item, the difference between our cost price and our sale price. And let's say our item costs $60 to produce. If we go down here, cost price of $60, 50% as a fraction is 50 over 100, that's half. The 60 times 0.5 or half is a markup of $30. So to work out our sales price, we just add the cost plus our markup, and we end up with a sale price of $90. Now, I do acknowledge that this will create a degree of confusion for some students, but what's imperative is that you have a understanding of how to work with percentages. And just remember that a percentage is a fraction of 100. So if we want to work out 1 in terms of a percentage, we just put 100 over 100% because a percentage is a fraction of 100. And we can just cancel that down. We get 1 over 1, that equals 1. So if we had a markup of, say, 300%, we need to add that to our cost, which is what we started with, 100%. We add these two together to work out our selling price, and we'll get 400%. Again, a percentage is a fraction out of 100. So we just go 400 divided by 100. We can cancel that. And basically our selling price will be 4 times our cost price. So therefore, 1/4 of that selling price will be consumed by the cost. The other 3/4 is our GP, our gross profit. Now, there are a variety of ways that you can use to calculate the selling price when you're given the cost price and the markup. Here's my approach. So we've got a cost price here of $1. We've got our markup as a percentage. We need to use our formula here to work out our selling price. So our cost price here is $1. We've got to add our markup. Our markup is 400%. A percentage is a fraction of 100. So we've got 400 over 100. We can cancel that down, and that equals 4 times. 4 times what? 4 times this cost price. 4 times $1 is $4. So therefore, we add these two together, and we get a selling price of $5. Let's go again. Start with the formula. SP equals cost price plus markup. Cost price right here given to us, $80. Markup as a percentage is 75. Again, a percentage is a fraction of 100. So we go 75% over 100, always over 100, and which equals 0.75, and then we just times that by what we started with, our cost price. 7.75 times $60, or 3/4 of it, gives you $60, and then we just add these two together, and our sales price equals $140. Now, what do we do if it's the other way around? If we're told the sale price and the markup percentage, and we have to work backwards to calculate the cost price, here's my approach. We create a formula. Our numerator will be our sales price in dollars. We'll divide that by our CP as a percentage, which will be 100 always, and our markup as a percentage as well, which you'll be told in the scenario. So I've got a selling price here of $450. I'm going to divide that by my cost price, 100%. It's always going to be 100%, which is 1. And I add my markup percentage, which is 200%. If I add these two together, I get 300%. So I've got 450 divided by 300%. 300% is 300 over 100. So that's just dividing it by 3. 450 divided by 3 gives us $1.50. That is our cost price. And if we work backwards, 200% of cost of $1.50 will be $3. And if we added that $3 to the $1.50, we'd be back at our $4.50 sales price. Let's go again. So we've got some crocs here. Formula, SP in dollars, sales price, over our CP as a percentage, plus our MU as a percentage. Our sales price is $75. Our CP as a percentage is always going to be 100%, which equals 1. And our markup this time is 50%. If we add these together, that's going to equal 150%. Divide that by 100, and you're going to get 1.5. So therefore, we need to divide $75 divided by 1.5, 100% plus 50%. That equals $50, which is our cost price. Again, if we want to check that, we go 50% of $50 is 25. We could add that 25 to our cost price, and we get back to that SP where we started from.